Good morning, everyone. I'm Vince Lancy. It's Friday, 7:44, and this is the GoldFix Market Rundown. There's the home page. Today, we will be discussing exclusive by Reuters and exclusive by the non-mainstream media, by us. The EU delays its Basel III rollout again, and it blames the US, plus lots of other stuff. Let's start with the markets. 10-year yields are down almost 5. The dollar is down 52. The S&P 500 is 57.84, down a massive, relatively speaking, 67. The VIX is trading 22 and change, up almost 2. Gold is 23.30. I'm sorry, woo, it's been a long time. 33.35, up 40, likely responding to recessionary and stock sell-off. Silver, 33.12, up only 7 cents. Copper, 465, up 2 cents. I'm processing this as I'm reading it. WTI, 61.26, down 1. Natural gas, 330, unchanged. Centered. Bitcoin down over 1,300. Platinum and palladium are mixed violently. Platinum continues higher. Grains are all offered very mildly. You're looking at 4 charts there. Today's charts, top right-hand side, that's gold. Top left-hand side, that's Bitcoin. Lower left-hand side, that's platinum. And lower right-hand side, that's silver. We're going to discuss silver in light of yesterday's buy recommendation for myself. And we're going to revisit Bitcoin and what it could imply. But before we do that, let's cover the story. Over the past several months, this has been hinted at, but yesterday it was pretty much written in stone by Reuters, and we've taken some content and we've reassessed it, and we have that for you as a news item. The EU delays Basel III rollout and it blames the US. May 22nd in Frankfurt, the European Union will postpone the implementation of the Basel III Fundamental Review of the Trading Book, FRTB, by another year, now targeting a go-live date of January 1st, 2027, according to senior EU and national officials speaking with Reuters. Industry officials argue the delay is necessary to avoid unilateral regulatory exposure. Commerzbank CEO Bettina Orlopp noted at a recent bank conference to that effect, quote, "It now looks as if this set of rules will not exist in the US. And we know that Brussels is looking at this carefully. We have to be careful and we maintain the international competitiveness of European banks. This has far-reaching implications, although it's not brand new news." The US hasn't even spoken about their delay, if there is a delay, or if they're going to forego the reality of it altogether. So we're going to give you a quick comment on that. This is not the first time the EU has delayed full rollout. There is a history of this proverbial can being kicked down the road going back to 2011 when gold made fresh all-time highs on the back of the euro crisis. Basel III has been in the process of being rolled out since 2009. There have been multiple important delays, and this is a new one. There are also serious implications for, number one, gold's price. Number two, the EU bank solvency. We happen to believe that while their explanation is legitimate based on US potentiality of deregulating banks under Trump, we also think that they're laying it at the US feet because of their own bank insolvency problems. So it's a convenient excuse. Blame it on COVID, blame it on Trump. Same idea. This underlines the deteriorating relationship between the EU and US. A hat tip to Tom Luongo, who brought this up years ago, but there are just so many signposts on this path to complete split up. I want to add that in their comment about the US deregulation, they lumped the UK. So the recent deal between the UK and the US is probably related to that, meaning the UK is going to be in our financial loop one way or another. We're not going to abandon them. We're an Anglophile country. Sorry, Tom. I wish it were true, but it's not. Anyway, so those are the three areas, and we're going to discuss what we believe the implications are for the price of gold, for the European bank solvency. They already have major problems, and the deteriorating relationship between the EU and the US. And you can read that story, the full news item, unlocked for all at EU delays Basel III trading rules to 2027. Coming up this weekend, the BRICS 2025 summit, gold collateral and the yuan endgame. That's pretty much exclusive from conversations that we've had with multiple mainland China people. Before every BRICS summit, there is an agenda. There are usually multiple agendas. One is the front agenda, what they're going to tell everyone, and that's important. Like last year, for example, was BRICS Pay, and the year before that was Enbridge. Well, this year it's probably going to be BRICS Pay again up front. But what we like to focus on, as we have done in prior years, is what the homework assignment is for the members of the BRICS. And this year, based on last year, we know what's coming out. And that is the yuan endgame is going to be revealed. And gold is directly involved in this. Next, Trump's bill tells you the US dollar will weaken further. That's our interpretation of something that David Stockman wrote, and we happen to agree with it. The next is why China will spend even more than believed. That's an analysis and commentary on something that T.S. Lombard's Rory Green had said. And for founders, we're going to give a portfolio update and Basel III delay risks, portfolio update for Bitcoin and silver and what have you. A couple founders asked me about that yesterday, so we put it together for you. Moving on. Yesterday's post, China Shanghai gold traders raised the floor as promised. A continuing explanation on what the hell is going on with China and their growing footprint in the market and the shrinking COMEX footprint. Dying, not dead though. Okay, COMEX. Geopolitics, Trump's big, beautiful deals. There are three of them. He's pivoting on multiple fronts, and I think to his benefit, to our benefit as well. Excuse me, I have the hiccups. Founders, financial repression is back on the table. That's a walkthrough of what we think is going to happen, given the fact that the deficit or debt is not going to be addressed. It cannot be addressed even if Trump wants to. And yesterday's morning meeting, BRICS sell US bonds pre-US summit, pre their summit. Data on deck. Kansas City president, 10 a.m. new home sales, significant. Fed Reserve Governor Lisa Cook speech. And on Sunday, Federal Reserve Chairman Jerome Powell commencement address. What a perfect way to ruin your weekend by throwing Jerome Powell in there. Sorry, but somebody had to do it. There's the home page. Again, let's go back to the charts as promised. We start with gold. Nothing new to say here. Let me throw up those lines that I drew. Fascinating, right? I say this line. I put that line there, and I'm saying it doesn't matter, but apparently the market thinks it matters, at least for the time being. So if we get above this high, there's a good chance we run up to this, and that's according to other technical work as well. Oh, I dropped my pen. Let's go to the backup. Backup. Moving to Bitcoin. We mentioned yesterday, that's a daily. We mentioned yesterday the measured move concept, meaning the weekly V, the break above it, and risking one to make two. Well, here's a daily chart pointed out by the Morning Ear that the 50-day moving average on the daily has just broken the 200-day moving average. You can see that right here. And so that would be a golden cross. They note in their analysis that It had so I forget the number, but it was over 40% rally the last time this happened. So take heed that that's another arrow in the quiver of this rally. Of course, the market is lower right now. Moving to platinum, not much to say except it's off the highs of the evening or the day, but it certainly has still more buying to come in. I would comment to you that in the first phase above 1,000, this is a short covering rally. Okay. At some point between here and here, it goes from short covering to new money getting in. So open interest probably dropped a little bit. I mean, at least dropped a little bit for half the day. And now you have longs getting in. So the question is, will the longs continue to get in at this price, or will they run out like air coming out of a balloon? And if they do, then the rally is over. If this rally is over, that should make you, if you see this market lower on the day, you want to keep your eye on silver. White metal fever is a two-edged sword. So if they stop buying platinum, they'll stop short covering, or they've run out of money allocated. Then you watch for silver to back off, and then you have to look for the whole snowball the other way. Just be careful. Use your technical levels if you're trying to integrate these two. Finally, silver. We have a full update on our portfolio and what our levels are here. But simply put, the buy signal that we got on the 21st, which we executed on, is buy the numbers done. It's over. Okay. Does that mean we're going down? No, it means you're in the range again. You could go down. However, the signal can re-instigate if we go back above, theoretically 33.11, 33.31. Okay. So our position remains intact for different unwholesome reasons. But that's how it works, and that's where we are. A final reminder, that's what we have coming this weekend. You saw what we have out today and yesterday. Hopefully that'll keep you busy as well as your family and friends. I'm Vince. Have a great day.